Well, good morning, everybody. Marketwise report for 1/11/24, and it is CPI day for those who celebrate. We are in a mode of kind of wait and see till 8:30. Let's jump right to it, to the 8 categories and tech levels. But first, let's jump to the economic news of the day. So, core CPI due at 8:30. This is going to be interesting because the PE ratio of the market is around 22, which is obviously high with a 5% intra-Fed rate. And typically what happens on CPI is there will be two reactions, a reaction up or down and then vice versa before we get the trend. So there will be some trapping going on, and this could just fundamentally be a sell the news event. And so we'll be watching for particular levels to fail, test, and fail again. Else we could be shooting for all-time highs, which we are not that far away. So we also have a 30-year bond auction at 1 o'clock, so that also could raise some volatility in the market. But let's go back to the levels and what's important about these levels today. So as I think I've noted in the past, the core levels that we are really interested in are the we start the day at 48.27. So this is the yellow band that you see. First level up is at 48.59 level, which is roughly the high of March of 2022. So this level right here is the first test. And then obviously the 5,000 level is the second major test that's in play. We were a little bit overbought, and as I mentioned, we have crossed over from a compression standpoint. So I'm still favoring a little bit of the bearish side for at least some consolidation back to that 47 major level, 47.58 or 47.36. Those are important levels to test, and if we can test those and bounce, then we could be off for the races again. But for now, these are some pretty important levels. I would not be surprised if CPI comes in low and then subsequently we flush higher and then subsequently sell off. But we shall see. If it becomes hotter, then these levels they will stay. The market will interpret that most likely as the Fed's got to stay higher for longer, and there's 6 rate cuts for 2024. It may be off base. So there is a possible sell the news. There is a possible, well, we've miscalculated, or we don't give a crap. We're going up anyway. I'm favoring one of the first two as the important strategies. But we'll let the market dictate which direction we go. And so right now, those are the key levels of 4,900 on the ups, 48.59, which most likely is 30 points above where we are right now. Easily doable, as the range I foresee is anywhere from 4,900 all the way to 47.71 or 47.58. That's an acceptable move for today. So let's jump back into the market checks. As I mentioned, these are all about what's happening in 37 minutes. How did the big boys start to play yesterday? The big boys were 50-50 roughly split, slightly ahead on the puts, but clearly they do not like the financials. The Russell Index and the China large cap was a focus on still trying to short, which is interesting. So this is going back to what we know, which is the small caps cannot sustain the higher interest rate. Let's go to large cap tech, which has been the model for the past year, and that's kind of what you see here. A couple of big hedges, most likely. Well, this one's extended out through March, but this one is obviously for the end of next week. So we are, see from their heat score, more on the put side than the call side. So we'll see how that necessarily plays out. That may just be protection. I found interesting about the unusual activities yesterday is significant amount of plays in the crypto space. So MicroStrategy, Bit Digital, Hut was around for the last couple days. Palantir again comes in. I did start a position in Palantir. There's another crypto, Bit Digital. So you see a fair amount of plays in that particular space, which is not surprising. Mara, with their high cost per transaction, is probably why they're shorting that. I'm surprised I didn't see much Coinbase, in part for the same reasoning. But that's that. All kind of waiting for the earnings tomorrow for the banks. But from a market cap perspective, this is obviously a big deal, as they will affect the chip makers and how that plays out from the Qs. When we go to some interesting upgrades yesterday, we had Oxy with a huge 40% upside. Buffett owns a huge percentage of this company, and 5-star analyst. This has got my interest. I have some in the retirement, in part because I think it will take a little bit to play out the energy trade, but that has particular interest as somebody knows something about this particular company. This Uber is an interesting play with 25% upside. That is near its all-time high and looking for a breakout. Amazon comes in again. They are clearly playing this Amazon call, which I should have kept after I saw the first one, but I subsequently sold it. I may re-enter that with a fairly good upside. If you believe tech is going to roll and go to all-time highs, you probably want to be in that particular space. Salesforce, after their bad quarter, or they failed to reach their expectations, is an interesting play that we'll take a look at. Lyft on a downgrade. I don't know about most of you, but for me, it's let's call Uber. It's not let's call Lyft. So they got some challenges ahead in my mind, but that's more politically. And then I did go ahead and short QSR yesterday based on those inside sales. The Yum Brands is another one that's on the hold side in that particular space. Now, we do see some other ones. I saw Papa John's. We also saw DoorDash gets a downgrade. And then there was, excuse me. And then we saw, there were some other ones, maybe not as a high profile analyst, but in the retail space, McDonald's, etc., being bought, or as a buy recommendation. From a insider perspective, we have a huge sell by a director. I actually know that guy. And PTC Therapeutics is interesting. This must be a controlled sell by something. That's astronomical. That may even be a duplicate. In any regard, those are something that's got to be put on the radar. That's I don't know, it's two different companies, or two different people. Well, I'll take a peek at those as well. But the pre-market movers, again, all the small caps that are in play here, nothing raises my interest. From early morning recommendations, we have Apple got another sell rating. They're just getting beat upon. We have Chipotle getting a buy. These are the ones I was talking about. Chipotle, Starbucks, McDonald's, all getting buy recommendations. McDonald's is interesting because it took a beat down because of what the CEO's comments were. Maybe that was an overreaction, and that now it has an opportunity for a buy. We'll take a peek at that, see if it's hitting in any major lines. But we got a Domino's Pizza that is a hold, and now we also have an Eat that is or Brinker that is a sell. So clearly the analysts for the food, restaurants, etc., have come out with their positioning for the first half of the year here. Okay, so that's that. Now it's a kind of a wait and see game for the 8:30 report to see how we play it. Yesterday was just a general grind up, in which, let's go back to the tech check, and a general grind up pretty much right from the get-go. It tested the daily pivots. It tested the pivots for a little bit, broke through it, got up to what I call the frog, or the standard move, and kind of stayed there for the rest of the day. And this looks like one. This is just the 330 move where people go to cover or take profit. Excuse me. Early morning action. We tested it 48.34, and if I was up at 4 in the morning, I might have shorted that as it failed that level. And now we're just kind of trending, waiting for the results. From a oversold, overbought perspective, some of the major plays are still intact. So as I mentioned, the XLC, that hit a buy recommendation back on 1.8 and has trended nicely through that particular run. Others, we did get into the XLB. We're relatively flat there. XLF I did not get into, and then XME I did get into, which we are about flat in that position as well. So we're waiting for those to make a move either upside or downside. From a consolidation breakdown, I don't see any at this stage. There's nothing that you might get a little here in the XLF. I missed that one. So that's event driven once the earnings come out. And that, I believe, is it for now. So we're still on the momentum trades from Model 1, momentum in SPY, Qs, IDM. It's all still momentum driven, and we have some unique or special sector opportunities in the XLC, the XME, and on the downside, XLF, and XLB on the long side. So that's it for now. Best of luck. Good trading as always. This is not financial advice. This is just my diary.